recent studies show that young Canadians still consider family as their main source for financial guidance and learning. But numbers also show they are open to new financial service providers and resources. So how can investors, especially new investors, start on their financial journey, and what are some helpful things they should keep in mind? Our tax and retirement expert, Michelle Munro, is here to share some helpful tips investors can take with them. Michelle, we're talking about smart money moves, and we're talking about starting on your investment journey. Thanks so much for being here. What can you tell new investors, maybe investors just starting out on their journey, tips you can share with them?
3 things, quick. We want to start early, stay consistent, and automate. So let's break it down. We're starting early. I'm going to start with a story. I started working about 30 years ago. Coulda, woulda, shoulda from an investing standpoint. If I'd invested $10 a week, I wouldn't have noticed $10 a week, truth be told. That would have been just over $15,000 that I would have saved and invested. So I'm telling this story just about the importance of starting early and even a little bit consistently year after year for decades really adds up.
That number is huge. And like you said, putting just a little bit away, you won't notice it. But investing in it and the power of compounding and compounding is key.
It's key. And it's the consistency. Year in, year out. Markets will go up, markets will go down, but you just keep on investing. And that's kind of hard to do. Which leads me to the third one, which was automate it.
Make it easy
just
for
make
yourself.
It come out of your paycheck or whatever your bank account every week, in my example. Set up a pre-authorized contribution plan. So it's just, you don't even realize it's happening. And my example, I said, well, $10 a week, but what if we did $50 a week or $100 a week? Yeah, albeit 30 years ago, that was a lot of money. It still is a lot of money, but you really compound that nest egg. So, Emily, I'm going to throw this back to you. Yeah. How does that sort of land with your own investment journey?
Yeah, absolutely. I have a young family. I have 2 kids under 6 years old.
They are.
My investment goals are different. I definitely want to save money for their education and for travel with the family. But I just love this message about sending the importance of investing early on with the kids.
Key.
I mean, really just show them the value of saving and investing.
Yeah, and you're really setting them up for success.
Yeah. For sure. I love all those tips. So start early, consistency, and make it easier for yourself with automated payments.
Yeah.
Now, Michelle, there's so much information out there, financial information. How can investors sift through all of that and take what they need?
It is. There is so much information out there. It can be sort of overwhelming and you don't know where to start. Well, most of us will start on our phones, right? And key something in, and then the algorithm takes over, and then it becomes more and more and more. A little bit of sort of analysis paralysis almost. And, and it's overwhelming. I should also say sometimes it's conflicting too. So our audience, we're watching the Upside Plus. Wonderful. Well, great. Continue on with that.
Great start.
That's a great start, yes.
Right.
Because I know you have a whole lineup of different videos. There's also Fidelity has podcasts. So we're watching, we can listen. We can also read. There's so much on the Fidelity website, fidelity.ca. Because there is so much information out there. Well, thinking about, where do you want to start? And I think that's where you're looking at, what are your financial goals? Is it a vacation? Is it saving for a car, down payment for a home, maybe a second home, maybe retirement is the biggest one. No matter what that goal is, really get granular about it. Like, what does that vacation look like? Where are you going? How long are you going to stay for? And the thing is, once you really get passionate and excited about that goal, then all the other pieces sort of fall into place. You can get more targeted about what you're asking, what you're reading, what are you listening to really get targeted about coming up with your plan, if you will.
Now, new investors, maybe young investors starting out, may look to social media for financial advice. Good or bad?
Great, because you're getting excited. You're learning about it. Take it with a little bit of a grain of salt, because there's short snippets, which may not just tell the whole picture. Sometimes I'll see something on social media and I'll be like, oh, kind of there, not quite right. Taking it one step further, often reading the comments that somebody said, well, yeah, and whoever the content creators missed C, D, and F. So adding that to it as well, which I think working with a financial advisor, I think we've sort of talked about it
on many past episodes, for sure. I
mean,
another great resource.
Right, but financial coach. Right?
That's a great way to
because
frame it.
It's instructional, but it's also the emotional aspect, because life happens. There's bumps along the way. How do you stick to your plan? Maybe you do need to make a little tweak along the way, but it's a real partner to help you achieve your goals.
Michelle, what are the benefits of diversifying your investments along the way?
Okay, so diversification. There's a saying that says, you don't want to put all your eggs in one basket. Well, when it comes to investing, I'd like to sort of reframe it a little bit and say, okay, well, maybe it's okay to have a basket, but let's put more than just eggs into that basket. Maybe we want some bread. Maybe we want some bacon. Maybe we want some tomato, avocado, salt and pepper. And
that sounds pretty good.
All that to say is that we want to have enough to make a meal. And as we save and invest more, we're going to grow that basket. And maybe sometimes we'll have a little more eggs. Maybe we'll have a little more toast, what have you. And so why do we want to be? Bring it back to your original question. Why do we want to have diversification? And markets, they go up and they go down. So if one class has gone down a little bit, well, if you're diversified, not your whole entire portfolio has gone down. So you've stayed the same, maybe you've increased in a different asset area. So all of that together, there are market fluctuations. What does that come back to? Well, you're overall staying on track to reach those goals. Earlier, we talked about media and your phones and stuff like that. And I read the headlines, same as you, and sometimes you read them and you're like,
you get freaked out, or you get really emotional about it, and you don't know where to think. Financial advisors obviously can help you sort of navigate those waters while you figure out where should I put my money.
But even when you're looking at, I found that sometimes I'll go back and I'll look back at my portfolio, which is well diversified. And maybe there's been a market downturn, but I've weathered through that. And it gives me that confidence to stay on track and really achieve my long-term goals.
Michelle, all good stuff here. Lastly, what important message do you want to leave investors with?
Okay. Really be kind to your future self. Kind of share a story again. At the end of every winter, I take a little 20.
There you go.
And I put it in my winter coat pocket. All right. And, I take it out the next year. And I'm like, I got a 20. Hooray. And I'm like, yay, me. But investing is sort of a little bit like that idea on steroids, because you put that 20 away and you leave it there for years, for decades into the future, bringing it back. What do we want for our call to action for our audience? Well, starting early, be consistent for years, for decades. It adds up. Diversification. In that basket, we want to have more than eggs. We want to have a full meal. And finally, the financial information. There's a lot out there. Thank you for listening, because by watching Fidelity Upside Plus, you're really setting yourself up for success.
This is the first step. And if you haven't invested yet, it's not too late.
No time like the present.
Michelle, as always, thank you so much for being here and sharing your insights. Really appreciate your time, and thanks so much.
It's a pleasure.
So we know diversification is key to growing your money and investments, and ETFs are an investment vehicle that could help you grow your portfolio. Here at Fidelity Canada, our ETF product line has grown and evolved since 2018. I sit down with a long-standing member of the ETF team at Fidelity, Étienne Joncas-Bouchard, Director of ETFs and Alternative Strategy. Étienne tells us exactly how ETFs have evolved in our product space and what trends he's noticing in the ETF landscape. Étienne, thank you so much for being here. Great to see you. Great to have you in the studio. Okay, we are talking ETFs. And when Fidelity first came out with their ETF products, I believe in 2018, we had a few on the line. Now we have over 50 products, I believe. What an evolution. Can you sort of take us through that evolution and what has stood out to you in this whole process?
Yeah, no, absolutely. And thanks for having me. It's great to be here. We've had obviously a very long and strong growth trajectory over the past, let's call it, 7 to 8 years. Our first initial products that we launched back in 2018 were focused on high yielding dividend stocks. And really the idea was to, over the course of multiple years, to build out a lineup that was, focused on product differentiation, not so much cost differentiation, which I think, when we think about the ETF space, really a lot of the noise comes from being lower cost. Our objective was always to provide tools for portfolios or just building blocks for advisors, for investors to look at and say, this is something that I can incorporate to complement something that already exists in my portfolio, to supplement maybe an exposure that I'm looking to get. And really it's been over those, let's call it 7 years, we've launched now more than 50 ETFs. We have more than $15 billion in total assets. So obviously thank you to everybody who supported that. And really the culmination of all that work was building our all-in-one ETF portfolios, which combine, 14 to I think close to 20 ETFs in certain of them. So that's really kind of the end game, which was to provide these kind of turnkey solutions, but we needed to launch each individual building block first.
And at the same time, the market has gone through so many phases during that 7 and 8 year period. Huge transitions. Obviously, it's kind of like you categorize the time before the pandemic, during the pandemic, coming out of it, and now with everything that's going on in the world right now, it's gone through so many phases too. So ETFs have sort of lent itself in different ways through all that time.
Absolutely. I mean, there's been a lot of innovation through those periods, right? I think it's created needs for investors that maybe they didn't necessarily know or think that they had. It's led to asset managers such as Fidelity to go back to the, I guess, take a look at the lineup and say, where are there holes potentially that I can fill? And that's really what we've been trying to achieve as well. Definitely the pandemic was a very unique and challenging situation, but it allowed, I think, for us anyways, to really kind of step on the accelerator coming out of the pandemic in terms of launching new products, having more innovative strategies, and it's really paid dividends so far. But it was obviously a very interesting time, but we joined the ETF industry in 2018 when the growth phase had already really started, and we were kind of capturing the continuation of the adoption of the ETF vehicle by Canadian investors, which had really started post-Great Financial Crisis.
So let's take a step back. For an investor who's just starting out on their investment journey, if they're looking to ETFs, what's the biggest difference between ETFs and mutual funds, let's say, and why would ETFs be appealing to them?
That's a great question, and I think even like before maybe looking at some of the main differences, I think it's almost like dispelling certain myths. I think a lot of folks will look at ETFs to say, oh, ETFs are passively managed and funds are actively managed. I think that's like kind of the biggest myth out there, where it's realistically they're both investment vehicles that are pooled investment vehicles. You buy shares into many securities that are underlying in that structure. But then obviously there comes some actual differences, which is not so much on the management style, but more on the kind of operational side, which I think the big advantage of the ETF is that you can actually trade it throughout the day on an exchange. And that provides flexibility. It provides clarity also on pricing, right? So you can see the price move throughout the day depending on supply and demand, depending on the liquidity of the underlying stocks, how those are reacting, or bonds. And it's become almost sometimes even a price discovery tool, which I know that I might be getting into the weeds a little bit there, but it acts as a looking forward tool when markets are less liquid and less or more volatile, right? In periods like March 2020 and others, the ETF vehicle was there to provide liquidity when maybe some of the underlying securities weren't. So, if I'm a new investor and I'm trying to consider both, I think it really just depends on, preference, if you will, from a trading standpoint. But then also, some strategies tend to work better in a mutual fund format. Some strategies are just more popular also in an ETF format. Like you'll generally not really see any passively managed mutual funds, while on the ETF side you can see strategic beta or factor based like we have, passive as well as active. So I think that the ETF has a bit more of a breadth in terms of the management style as well as the different types of strategies. I mean, there's more ETFs traded on the TSX than there are stocks. Yeah. So I think there's an option for everyone out there.
Yeah, wonderful overview. And like you said, ETFs offer flexibility, diversification, and getting into the market at a lower cost if that's what you want. Now, our ETFs, our all-in-one ETFs, are wildly successful here at Fidelity. Can you let us know why it's so appealing and why it's doing so well?
Yeah, I mean, it depends on the period that we look at. I mean, that's the beautiful thing about these portfolios, that we've constructed them in a way where we want them to be very core and very diversified, as much from an asset class perspective, right? So you can get a mix of fixed income all the way to 100% fixed income all the way to 100% equity, and then pretty much anything in between in terms of your base asset mix, and that's dependent on your risk profile, your objectives from a financial standpoint. But really, those portfolios have been successful because of the building blocks that we've put together there. Where, as I was mentioning, from an asset class perspective, geographic perspective, they're global. From a style standpoint, so we incorporate value stocks, we incorporate quality stocks, momentum stocks, low volatility stocks. These are all different characteristics or traits of various baskets of stocks that, when you build them all together, offers better diversification than just a traditional market cap weighted index or passively managed solution. So that's allowed us to be successful. We obviously have a small crypto allocation in the portfolios, which is not only unique, but also has been over the the life cycle of the funds since we started them in 2021 has been an additive part of the portfolio. So those are some of the uniquenesses versus, say, some of our main competitors. But every calendar year, it's been something different in the portfolio that's helped it along the way. So I think that's just a testament to the construction.
So we know that our Fidelity ETF lineup caters to many investor needs. Étienne, just to sum it up, why would investors consider ETFs?
There's many good answers. I think the ETF market in general, whether that's Fidelity or just the Canadian ETF industry in general, there's so much choice. Like you can literally find pretty much anything you're looking for from an investment style standpoint. If you're looking for a specific outcome, I think that's really the main message is if you're looking for income generation, well, there's a bunch of ETFs that can do that for you. If you want equity exposure but with less risk, well, there's low volatility ETFs. You want specific sector exposures, you can get that. Specific commodity exposures, like there's just such a wide breadth of solutions out there. And then to supplement that, if you will, the ease of access, the ease of transaction, the cost of transaction is also very, very low. Most of the ETFs that are traded on the Canadian exchanges are very liquid and very easy to trade. So those are some of the main advantages. I'm sure there's a bunch more that I'm not thinking of.
Now, Étienne, we thought we would have fun for our last segment. We dug deep into the internet and asked our investors their top ETF questions. I have 3 here. We're going to make it a little challenging. You have 30 seconds to answer each question.
Sounds good.
Okay, you ready?
Absolutely.
Okay, let's start the timer. Number 1, what should an investor look for when buying an ETF?
I think the number one thing to look for is cost of transaction. So that includes when you're looking at a spread, right? So you don't want to be trading something that's too illiquid. Second would be, take a look at the top 10. So in terms of holdings that you're getting,
okay,
they'll be the number 2, the 2 ones that I'd focus on.
Okay, that was too easy. You answered that in 20 seconds. Okay,
All right,
let's go. Next question. Are all-in-one ETFs good for first-time investors, or should they have more of a mix?
So the all-in-one ETFs, I think the big advantage of them is just the incorporated diversification that we have already. So I think it fits many different types of investors, depending on if you just want to use that as just a core, you want to use it as a core and then add satellite positions. Okay. But the way that we've constructed them, I think, is good for a seasoned investor, beginning investor, really kind of go anywhere type product.
Okay, 22 seconds is the sweet spot here. So that was great. That was really good. Okay, last question here. Can I use ETFs inside my TFSA or RRSP? Good or bad idea, and why?
You can use ETFs in any type of investment account. Boom, 5 seconds.
But you can, right?
Absolutely.
Like, yeah.
You can use ETFs similarly to a mutual fund that you can put it in your TFSA, RSP, tax-free home savings account. You can use it in your non-registered account. That's kind of one of the great things of 81-102 type investment vehicles, right? So very flexible, very easy to use.
I didn't get to press the red button and have fun. There you go. Étienne, thank you so much.
Pleasure.
Thanks for being here, and it's great to see you.
Thank you. Thanks for having me.
Exchange-traded funds offer you the chance to invest in a diverse mix of assets. Its flexibility makes it easier for investors to participate in the market. So whether you're just starting on your investment journey or reaching the later chapters of your path towards retirement, remember, consulting with a financial advisor is the best way to make the most of your money and your financial future. I'm Emily Anonuevo, and thanks for watching The Upside Plus.
Thanks for listening to, or watching, Fidelity Canada's The Upside podcast. Subscribe on your podcast platform of choice so you don't miss an episode. And if you like what you're hearing, please leave a review or a 5-star rating. Fidelity mutual funds and ETFs are available by working with a financial advisor or through an online brokerage account. Visit fidelity.ca/howtobuy for more information. While on fidelity.ca, you can also find more information on future live webcasts. And don't forget to follow Fidelity Canada on LinkedIn, YouTube, Instagram, or X. We'll wrap things up today with a quick disclaimer. The views and opinions expressed on this podcast are those of the participants and do not necessarily reflect those of Fidelity Investments Canada ULC or its affiliates. This podcast is for informational purposes only and should not be construed as investment, tax, or legal advice. It is not an offer to sell or buy or an endorsement, recommendation, or sponsorship of any entity or securities cited. Read a fund's prospectus before investing. Funds are not guaranteed. Their values change frequently and past performance may not be repeated. Fees, expenses, and commissions are all associated with fund investments. Thanks for tuning in. We'll see you next time.